Hey, I'm Daniel Snyder. In this week's episode of Week in Byte, we are joined by Susannah Streeter, Senior Investment and Markets Analyst at Hargreaves Lansdown. We're discussing inflation in the States and across the pond, central bank moves, cryptocurrencies, and more. So let's get into it. Susannah, so great to have you back on the program. It's been way too long. How are you doing?
I'm doing very well. I've had a great summer, but certainly the financial markets have kept me very, very busy. There's never really a pause, is there? So certainly we've seen a pretty volatile period, and we've got to keep across it.
Yeah, no kidding. And that's where I'm like, where do we even start this conversation? There's so much going on. And it's great speaking with people like you because you are over there in the heart of what's going on in Europe and the UK and everything else. And we love to hear the perspective of that as well. But you also watch the US. So this is a perfect blend. So let's start overall. Obviously, inflation. We're seeing two different things in these narratives right now, right? US has had a hotter inflation than we were expecting, but you're starting to see a little bit of dip over on your side. Where are we headed from here? What do you think?
Well, we have seen this fresh bout of anxiety on financial markets because that US inflation CPI reading came in higher than expected. And that really did knock confidence because there had been really high hopes that actually inflation may already have peaked. But certainly that CPI reading didn't show that that was the case. I do think, though, we've since had the producer prices index come in, showing that actually perhaps there were some more deflationary pressures coming in, which seemed to have soothed markets a little bit more. But I think the realization is dawning that the Fed is going to keep pouring cold water onto the economy to try and cool down these prices because there's such a way to go, isn't there, before we reach the target that we need to, that central banks really aiming for, that 2% target. And I think that because of that, you're going to continue to see a lot of volatility and ultra sensitivity towards any type of data that comes out, indicating that the Fed's work really is still not done.
Yeah, solid points. I mean, as you mentioned, the data across the board, whether we're watching the employment numbers or the initial jobless claims or the CPI, or obviously we have the Fed decision coming up this next week, which I'm sure is going to be our big catalyst watch. I don't know. We'll see. Kim will tell us for sure. But I mean, the ECB is also, or the Bank of England, they're talking about rates. You know, got the European Central Bank, they're looking at rates. I mean, Forex seems to be going across the board. So it's like 60-40 portfolios have been hit this year. Bond market is freaking out. Where is there any safe investments right now? What are we thinking?
Certainly, I think times like this, you have just got to look to the longer term. It's a very volatile period. But in times like this is when, regular investments, then you can ride out the falls and also the rises within the stock market and kind of average it across. So actually you're not going to be too buffeted either way, but you need to have a longer term horizon. And of course, diversification is absolutely key. Tweaking that, perhaps adding a bit more ballast to the portfolio by investing across different asset classes. As far as sectors are concerned, there will always be demand. We are going to see so much demand going forward, I think, in terms of trying to find efficiencies within businesses because of this higher inflationary environment. So I think certainly the cloud computing environment does continue to offer kind of a long-term growth possibilities and expectations. And also look at healthcare as well, healthcare tech. I think, again, if the longer term, we're going to see expansion in that area. But none of these areas will be immune from the volatility that we're seeing across financial markets right now. So this is, a time when you shouldn't necessarily be switching and ditching stocks, but looking at the long-term fundamentals.
That's a great reminder for everyone. And so you mentioned healthcare tech, you mentioned cloud computing, and so we're thinking about efficiency of businesses. Now, I'm a little surprised though. Oil and gas has been the topic of conversation all year with how it's been going on, and obviously winter is coming. Right? If you're a Game of Thrones fan, if you're watching House of Dragon, I mean, it's the theme over the last year. So what's going on? I mean, we're right around the corner. Energy, we heard about the worries and the woes coming up, but then we hear about gas levels breaching, the storage capacity earlier than they thought. We saw Russia turn off Nord Stream 1. I mean, you're over there. What are you expecting from energy and oil and gas and how it's going to affect our markets and our daily lives in the months ahead?
Look, right now we are still in the midst of an energy crisis. Governments are scrambling to try and alleviate the financial pain for consumers and for businesses. Certainly, we've seen that here in the United Kingdom. A package of measures promised. Big spending by the new Prime Minister, Liz Truss, was promised to try and help out consumers, because really we were looking at a very bleak winter indeed, with household bills absolutely rocketing, bills for businesses set to rocket as well. And businesses are still waiting to find out the detail of the plan that they will be given. But certainly it's been considered as, almost as dire for some companies as the financial crisis. And of course, we had that furlough scheme during the pandemic. And actually, the scale of this bailout in terms of energy really does. It dwarfs that furlough scheme payment that was given out to businesses and to workers. So you can see the scale of the crisis. European countries as well, they're scrambling, as you say. Germany in particular, filling up the gas reserves. That has added to a bit more confidence, because they're ahead of the game than was expected, really, about 85% capacity and growing, to try and deal with this turn-off of gas from Russia. And certainly we've had this unveiling of this 5-point plan by the European Union to try and ensure that we not only conserve energy in European countries, but also there is this real switch towards renewables. And at the same time, we have got a pledge to tax oil and gas giants, more windfall taxes brought in Europe, although that's been ruled out for now by the new Prime Minister. So it's uncertain times for the sector, without a doubt. Oil and gas companies should be expected to be taxed more in this current climate, certainly in some European countries. We still don't know exactly how it's all going to pan out for industries. Adding to all of this, of course, we've had the drought, which has added to complications, causing river levels to lower, which has implications for hydropower, not just here in Europe, but also in China as well. So we've got that effect to deal with. So certainly this energy crisis has not played out fully yet. And I still think we've got a real winter of discontent to come, despite all of the pledges that governments are giving their citizens.
Yeah, what a time to be alive, right? These macroeconomic conditions and everything else happening, whether we can control it or not, has created such a high level of uncertainty, as we're talking about. That being said, though, I wanted to switch gears a little bit because it seems to me like you like to watch cryptocurrencies as well. We're talking about Bitcoin's been kind of staying around this 20,000 level, but then Ethereum just had their greatly hyped the merge, right? That they just implemented. Would you be in the camp that cryptocurrencies are still a market that are investable?
I think the problem is that we really don't know what the future will be. We don't know who the winners will be in the crypto Wild West. Certainly, central banks still try and thrash out the types of digital currencies that they will back. Will it be their own digital currencies? Will they be backing stable coins? Who will be the winners? Really, we just don't know. Certainly, digital currencies, crypto is here to stay in some form, but whether the front runners at the moment will be the front runners in 10 years' time, who's to know? At the moment, this is pure speculation. And I think that's what you've seen playing out within the crypto market. And remember as well that crypto was considered to be a real hedge against inflation. Well, as inflation has soared, crypto has dived. And so actually, crypto has been fueled by this era of ultra cheap money. People have had money to spend, they've put it into crypto. And then because of this, we've seen organizations also and institutions putting money into there because they haven't want to miss out. But I still think that it's, at the fringes of say institutional investment. And actually a report by the Bank of England has indicated that certainly at the moment it's not causing financial instability, the amount that's being put in. But obviously has been a risk, and that's why I think we're going to see lots more legislation and regulation in this sphere. And because of that, again, that presents a risk to the number of crypto coins and tokens out there, because simply we don't know exactly what form this regulation is going to take. So if you're speculating in cryptocurrency, only do it with money that you can afford to lose. And obviously, I think we're still going to see these big runs and falls and this volatility to continue, because people have got a real fear of missing out. They don't want to be left out of the next big thing. But certainly for now, I think the future is still very uncertain.
Yeah, that's a very good take. I think I'm in that boat with you about, only maybe with money that you are able to lose. So as we're moving forward into the end of the year, we've talked about all this sort of uncertainty. I got to ask you though, if you had to pick one thing that you were watching above all else that you think could be a big catalyst that might give us some direction within this battleground of a market that we're having right now, what would be the item that you would recommend investors keep their eyes on most?
Well, I think actually what's been really interesting in recent weeks and months is that we haven't seen quite so much coverage in terms of the financial market and what is happening in terms of the war in Ukraine and Russia. And I think we're going to be heading towards a very kind of tricky period where Russia has had significant losses in Ukraine, and there is concerns about or expectation of perhaps there could be some kind of leadership change in Russia as a result of that. And I think that geopolitical issue is certainly one to watch. What could happen that could change the direction, certainly, of the war in Ukraine, in two ways. It could either ease some of the price pressures we've seen in the energy market and some of that volatility, or unfortunately, it could create yet more uncertainty and concerns about a wider escalation. So I think certainly that will be coming back on the radar in the weeks and months to come.
Amazing. Let's go ahead and leave it there, Susannah. We really appreciate you having the time and taking the time to join us on the program again. You have a great weekend, okay?
You too.
And it's now time, the time you've all waited for. Let's get over to Seeking Alpha's Kim Kahn for next week's Catalyst Watch. Kim, how you doing?
Good, Daniel. How are you?
I'm good. What do you got for us?
75 or 100. Nothing else matters next week. 75 basis points or 100 basis points. It wasn't even a question last week, and then we had the hot CPI number, and markets started pricing in the possibility of a full point hike. It kind of peaked at around 40% chance. It's now, at the time of recording, about half that, around 20%. So I think Wall Street's kind of has talked its way into the 75 basis points. Nomura is the only shop I've seen actually come out and back a full point hike. So if we get that consensus 75 basis points, then the attention is going to turn to the dot plot. We get a new one, especially the 2023 dot plot's going to be in focus if it moves up above 4%, like the markets are pricing in right now. Whether or not they price in any cuts for 2023, not looking likely there. And then you get to have the fun of watching Jay Powell sigh and look exasperated as he gets 20 questions on the dot plot, which he doesn't like anyway.
Yeah, great point. I'm also wondering, you think his speech is going to be less than 8 minutes this time?
Well, he's got the Q&A, so it can't be. But I think might see a lot more abrupt
All of his
answers.
answers will be one sentence answers.
Yeah, or it could just shrug. Yeah,
just get me out of here, right?
Yeah.
I mean, if we see 100, I'd be extremely surprised personally. Maybe that's what they should have done 3 months ago. But
yeah, it's tough to do. I mean, you pretty much have to be done. Argument is that it gives you kind of room to cut maybe sooner if you do a full point slam on the brakes, unprecedented hike. I don't know. I would say I'm with you in your camp, but then my instincts in the Fed are usually pretty wrong. So in the George Costanza way, I think I'm going to go and do the opposite. I'm going to go with 100 basis points.
Yeah. All right. Well, at least we're not. Who is it? It's Cathie Wood, Jeffrey Gundlach, and Elon Musk that are in the let's go ahead and start cutting again boat.
Yeah, because deflation's already on us kind of thing. Yeah, not there yet.
Gotta love opinions. We all have them. Well, we'll find out next week. You have a good weekend, Kim. Take care.
Thanks, you too.
All right. Now, before we bounce out of here, I wanted to mention we had a fantastic webinar this week with Chris DeMuth Jr. from Sifting the World. If you didn't catch it live, you can find it on Seeking Alpha. Just go to the website, search for After the Everything Bubble in the search bar, and you can find that. And also just a reminder that we have other weekly shows that we love to have you guys join us for. We have What's Happening in the Stock Market with Mike Saul every Monday at noon Eastern. And I am joined personally with Austin Austin Hankwitz on Wednesdays at noon Eastern as well for Stock Market Live. And we are usually joined by a special guest. Sometimes it's Mike Saul, or we bring on some of the marketplace authors who are the experts in the field and let you ask questions directly live while we're talking so that you get answers right away. And those can be found on Seeking Alpha's YouTube channel if you want to check those out. That's all for this week. I'm Daniel Snyder. Have a great weekend, and we'll see you again next week for a recap of the Fed FOMC.